thinking long-term, putting something and building a business. And that business, they might not make you money for the first 6 months or for the first year, but you know that you're building equity.
Yes.
And equity is what makes you rich. Hello and welcome to the Happy Money Podcast. I am here with my son, Michael, and on this show, it's sort of a continuation from last week's show. Last week, we talked about anger, we talked about fear, investing, and this week, it's going to be a little bit more of a continuation, and we're going to talk about some strategies that you can use when you're investing to calm yourself down, sort of be detached, and make better and wiser financial decisions. Mike, how are we doing today?
Doing well, Pops. How we doing?
Do you remember what we talked about last week? And when we were talking about it, we wanted to shove everything into a 20, 25-minute podcast, and it wasn't possible because there were so many different things going on. Because when you talk about investing, talk about fear, talk about anger, you talk about what's going on in the market. I'll give you a quick example. Do you remember when tariffs came out about 2 months ago?
Mm-hmm.
Everybody was freaking out. Stock market was at 42,000. I don't know what the date was. What was the date? April
2nd.
April 2nd. The news broke. The Dow shot down to 38,000. And now where is it right now?
It's back up.
Back up to 42,000.
Back up a little more, I think it was.
So can you walk me through what is going on, in your opinion, in an investor's mind when you see something like that happen?
So the problem is I was looking at the S&P recently. S&P did this thing where, again, in 22, it went from 47, 48. Later, it went down to 3,800, and then it went back up. And so this is not a new thing.
Mm-hmm.
Even if you go back to 08, if you go back to the 30s, it always went down and it always came back up.
Mm-hmm.
And so the problem is people are taking this fear mongering where it's, hey, let's listen to the news media because they know best, right? They know the right investment decisions, right? And when it went down, it was all over the news. And when it went back up, I didn't. Did you hear anything? Did you hear the news talk about, wow, more breaking numbers? You don't hear that.
I didn't. And what's really interesting with this whole scenario is Trump can't win. Because when the market goes down, they're blaming him, which if you're the president, if you're the leader of the economy, quote unquote, you should take criticism. But when the market shoots back up, Trump's making money for his billionaire and his friend. You can't win.
You can't win.
So you, as the investor, if I'm just a regular investor for my own portfolio, what I'm trying to do is I'm trying to look at all this information and I'm trying to be curious about what's going on. Because I've heard the quote, curiosity is the currency of learning. So if you're curious about the situation, you say to yourself, let me see patterns going on. And you've mentioned many patterns. Markets go up, markets go down, they go back up. So if I had freaked out when tariffs were announced at 42,000 and all of a sudden the market drops to 38 and I sold, I'm down 10%.
Yes.
Market shot back up, I'm going to jump back in because of the euphoria. So you just lost 10% and you're buying high, selling low, and then buying high again.
That's the problem.
That's something that you don't want to do. That's what happens with most investors is they don't understand that emotions can be a good thing, but you don't want to make a financial decision when you're locked into your emotions because typically you're not using your thinking brain. You're using your emotional brain, and that's not a good place to be making decisions.
Not financially, no.
No.
Because financial does not care about your emotions.
And I think a lot of other areas in your life as well. If you don't take the step back and reset and think about it. I love what you said last week. You were talking about, let's take a step back. Don't do anything for 24 hours possibly, even when sending out an email. Don't send out the email right away. Let it sit. Think about what you're going to send out. Don't have that emotional reaction right away. And I think it's the same thing with finances. Now, if you're in the stock market, possibly, Michael, you could put a stop loss. If you buy a stock at $10, take the emotions out of it. If this stock goes down below $8, it's going to trigger a sell.
Yeah.
Exactly. That may be one way to take the emotions out of it because you're looking just at it strictly from a number standpoint.
Yeah. And even like you said, you can always short the market. And that's always a big thing. I'm surprised that wasn't a big thing I would hear about. When Trump announced tariffs, they knew markets were going to go down. I didn't really hear anyone saying, I'm going to short the market because I know it's going to go down.
Well, those guys who are making the money, do you think they're going to announce their strategy?
Absolutely not. but yeah.
Yes.
you know what I mean though, right?
Yeah, I agree. Yeah. What else did you want to touch on as far as anger and fear and all those emotions when investing?
So let's go back to the S&P. I've got the numbers in front of me. So I clicked 1 year to date. And again, they averaged 10% year over year from what I hear. Right now it says 9.68 from last year to this year increase.
I looked at a study also, I forget what it was, but it was probably 40 or 50 years on average. For the last X amount of years, it's returned about 8.5%, the stock market. But that means that you have to be in and just continue to buy and not sell when it's low and not, not buy when it's high.
Yes.
Exactly. And that's more of a long-term mindset. And I think that's one of the things that people need to realize. What is their personality? Is their personality more of a gambler, jumping in, jumping out? The stock market may not be a good thing.
I agree. And kind of like you said, it's like gambling in a sense. It can be. Like if you play this 30-year game out from 1995 till now, like that's an investor trade. But if you're day trading, if you're going back and forth month over month, like I kind of made a joke to my professor. I'm like, it's funny. The stock market is kind of like legal gambling. And he just started laughing his head off. He's like, you're right. That's basically how it works for some of us.
For most people, because you should be able to, if you're an investor, make money when your asset goes up in value and make money when your asset goes down in value. And most professional stock traders, I'm not going to get into options and puts and calls, but they can. And it's the same thing in the real estate space. Real estate prices are dropping. I'm still making money with my portfolio.
Yeah.
I don't have to sell, because I can hold on. I can sell when asset prices continue to go up, but I'm still cash flowing on my deals. And I think understanding that makes you a much better investor. Understanding that, hey, I can make money when markets go up and I can make money when markets go down.
Yes. And again, because you've disconnected the emotional part of this.
Yes.
Like if there's that mentality of, oh, the market's down, I got to sell my property before it tanks in value. Okay, well, that's not going to get you far. It'll get you somewhere, but it ain't going to get you very far. You know what I mean?
Yes. What kind of mindset do you think that I've tried to help you cultivate as far as investing over the last, like, say, 7-10 years that you've been investing? You've been hearing me talk. Where do you think your values are with investing?
Well, there's always value to add somewhere, right? There's always value to add. Even when markets are down, everything's not going the way that it's supposed to, there's always something that you can add, right?
And as far as long-termism or time horizons, what's your strategy? What would you say is your investment philosophy?
So like, what is this going to do for me 5 to 10 years from now? And even beyond that, how is that going to help me 30 years from now with just daily struggles, daily everything like that? How is this going to be able to provide for my needs 30 years from now, right? And so it's no longer I'm going to be buying stocks and crypto 6 months and kind of just be that kind of day trader, which again is not a bad thing in of itself. But you got to remember, like, what's the long-term plan? What am I doing this for? And how is this going to help me in the long term?
And what vehicles or what investments lend to that kind of philosophy or do really well in that kind of philosophy, in your opinion?
I like real estate, as always. You know that better than anyone. I think just basic stocks like S&P 500, Dow Jones, those are really good if you're not, I don't want to say a seasoned investor, but if you're somebody who's just getting into this, that might be a good route for you to develop the mindset that you need to have for investing.
It's interesting because when I was your age, I remember looking at companies and saying, these are blue chips. They're never going to go out of business. And a lot of them were around for such a long time. Now there's just so much more risk with technology and with the way things move so quickly.
Yeah.
I remember years ago, I was your age probably, you could buy Philip Morris. It was, they owned Nabisco. They had this cigarette. You could buy them and they can give you like an 8% dividend yield. You're yielding 8% on that. That's something where you could hold long term. And even if the stock doesn't go up, you're still making
dividends.
Yeah, but now companies, it's just much more challenging. You see companies going in the Dow, out of the Dow, because there's so much more, I don't want to say volatility, but the markets change so quickly. So it's so hard to say, hey, buy these stocks and invest for the long term, because you don't know if a stock or a company is going to be around 3 years from now with AI and with all this technology. Whereas possibly if you buy into a collection of stocks, like you said, the Dow Jones 30 or the S&P 500, I think that may be a better solution if you're an investor who is nervous, who is fearful, who is emotional and says, I need to jump in and jump out. Maybe it's just a person who just puts money into that in average and just lets it sit there.
Definitely. And even with that, kind of like you said, a lot of companies don't pay dividends. I don't know if this is a newer thing or this is the past 20, 30 years or whatever, but that's another thing that we got to get over. Like, I'm not going to see this money for X amount of time. Like, I'm not going to get paid quarterly. I'm not going to get paid biannually, all that. And so even just learning how to part with your money, knowing that it's somewhere, knowing that I'm not going to get a return right now, but that it's going to be there in the future. Like, that's another hurdle we gotta conquer.
Michael, that's hard though. That's really challenging for a lot of us, because that's delaying gratification. And that's part of your investment philosophy. Long-termism, thinking long-term, putting something and building a business, and that business, they might not make you money for the first 6 months or for the first year, but you know that you're building equity.
Yes.
And equity is what makes you rich. Cash flow pays the bills, the dividends pay the bills, and you want some of that. That's why we love real estate, because real estate can provide the cash flow. But at the end of 18 months or 24 months, all of a sudden that equity is what builds up. And then
Yeah.
you can extract that equity, and that's what's going to make you wealthy.
Yeah. So sometimes even in our deals, when we buy real estate, we don't see a return for 2.5 years sometimes.
It's hard, isn't
And that's hard for a 23-year-old guy. That's like 10% of my life right there. You know what I mean? It's a freaking long time.
But when you do see the return,
Oh, but it pays off. Yeah, I know.
how's that feeling?
It feels pretty good.
It's one of those things where it's challenging even for me. Like, I've got this chunk of money. I have to ship it off to somewhere. Like, think about that in your mind. And it's like, is it going to do good? Did I buy it for the right price?
Yeah.
Is it going to bring me money? It's challenging for all of us. But the great thing about that is that once the money's locked in real estate, it's a lot harder to exit the deal because the money's locked in there. Whereas with stocks and bonds and crypto and gold and silver, you can
press the
basically
button, yeah.
hit a button and you're out.
Yes.
That's the challenge with that, because it's more emotions based, and you hear, well, Trump's enacted tariffs, or all of a sudden we were spending, all of a sudden bond rates, yields are going up. It's going to hurt my pricing. Let's say you can exit that asset really quick and make a short-term decision, but it has longer-term ramifications because you didn't think long-term, because in that moment you were flooded with fear, and all of a sudden fear took over your body, took over your mind. You're like, I'm hitting the button, I'm out.
Yes. But even before, like, it wasn't when you buy stocks, it wasn't a computer game. Like, you would literally call your broker, I want to buy X amount of stocks. Where's the market at? Do I sell it right now? And so maybe for that person, maybe we would recommend, hey, why don't you go out and get a financial advisor, somebody to say, this is what you should be buying. How much do you have? This is what you should be in. Call me up if you have any questions. If you need to sell right now, like, I'll let you know. Like, I'm not going to let you make any dumb decisions based on your mentality.
You know what they should also go out and get?
What's that?
A money coach.
Money coach. Always a money coach.
Becoming certified as a money coach. Why would I say that? That's another layer. It's another example of learning what your personality is. And we're not here to tell you what investment vehicle to pick, but you have certain archetypes, certain personas that you're better suited, and you'll find out through through all the training and the calls that, wow, maybe the stock market thing is not for me because I'm more impulsive. But you can also find out the different patterns that you exhibit.
Yeah.
And that for me, that's why I didn't like stocks. I didn't like the volatility. I didn't like listening to the news every day. I felt overwhelmed myself.
Yeah.
So if I buy a piece of real estate, it's going to affect it, but not in the short term, because there's not much that I can do. Yeah. I'm running a small little business with that real estate piece. And that to me makes a lot more sense. That to me, I can force the value on that asset and I can make money with that. I don't care in the short term what happens with tariffs. I don't care what happens with pricing. It's a completely different model, and it fits my persona. It fits my personality.
Yeah. And it's good that you say you're starting to watch the news less. I've been doing this a lot. I don't go on Fox or any of those channels anymore. And again, like, I'm thinking, what actually changes in my daily life when I know about what's going on with tariffs and all this stuff? Obviously, if you're in finances, you kind of got to know about that. But what actually changes in your daily life when you watch this stuff? Does anything change at all, or is it going to be exactly the same in a sense?
You know, we think
within reason,
does,
of course.
Mike. We think it does. And there may be a couple of things that you can bookmark. Like if you're in finance, maybe you bookmark the 10-year treasury.
Oh, yes. Yeah.
Maybe you bookmark what the S&P 500 is. Maybe you bookmark a few things that you need to look at daily. And maybe you want to read some of the publications. Like if you're into real estate, we read multi-housing news. We like to see what's going on. But the broader sense of what we think is news, aka propaganda, that's not really
what
helping
I'm
us
referring
out.
to. Yes.
But even the news nowadays, where the Wall Street Journal, the New York Times, they're not business based as they used to be 20 and 30 years ago. They focus more on eyeballs and more attraction and more clickbait. That's the problem. So just be aware of it. And what you're saying is whatever goes in, just be careful. Because that's going to really affect your day to day.
Because that's going to be a trigger. Like you said, news really isn't news anymore. It's just a bunch of nonsense.
Yes.
And so if you're filling your head constantly with nonsense and you're wondering, why am I so anxious when I'm around my finances? Okay, maybe let's go back to that problem. What are we looking at all this news for?
I love that.
Let's learn to cut that out. And I would even say, hey, take a week off of all news, except for maybe if you're in business, like you said, 10-year treasury, all that stuff. Take a week off of all propaganda news and see how your financial habits differ. Everything from spending, everything from investing, impulsive buying, see how that changes.
Do you want me to do that? Because that sounds painful.
It is painful, isn't it?
Well,
if you want to, go ahead.
One way to do it would be to if you're on your phone a lot, just delete the apps. So I've done this occasionally, every now and again. I'm really not on Facebook that much. I'm more on Instagram because it's more that I'm looking for content that we can create for the business. It's more for business ideas than just for consuming news. But then you do go down that trap, and all of a sudden you start watching a video, then you start watching another video. So you really need to be careful, and it's so addictive. Willpower is not going to help you out in this situation.
No,
because you have patterns. and certain addictive qualities where you're like, I like this video. I want to watch this. I want to continue watching this.
Mhm.
Then you go down that. So you just need to be careful. If you want to take a few days off, what you would call a fasting, or more importantly, Michael, what about spending 10 minutes this time of the day and 10 minutes at the end of the day, let's say, and just make it really guarded.
Yeah.
And I think that's the way to start, because cold turkey may be hard for some people.
Yeah, I agree.
But for me, I like the cold turkey thing. I just want to cut it out. And then all of a sudden, if I want to start introducing it a little bit slower, that works for me as well.
Yeah. We were just talking about this morning with Mom. We're like, Instagram and Facebook, we don't see our friends anymore on there. It's all commercial. It's all news channel. Like it's not what it used to be. You know what I mean?
Yes. They need to monetize. They're a business.
Unfortunately, they're a business. Yeah.
So you're talking about, you don't see any of those news feeds. All the feeds you see are basically ads.
Advertising, business, all this other stuff. And it's completely shifted what it was supposed to be.
Mm-hmm. Mm-hmm.
And that kind of buys into that fear mongering, that kind of anger. Like there's a reason why they're giving you this content. There's a reason why you don't see your friends as much anymore, because they know this builds patterns in your own head.
So they're looking at your algorithm and seeing what you're watching and saying, oh, wow, Michael's watching real estate. He's watching the stock market. I'm going to start feeding more influencers who are in that space.
Yes,
so to actually, self-fulfill the prophecy that, I'm looking at this stuff and it's market's going down. Well, the algorithm is showing me that the market's going down, or showing me negative news. And that's where it's feeding into it,
Michael.
And it's clicking it. Yeah,
exactly.
That makes sense.
Yeah. And so it's great. Like if you know that triggers you, what would it look like you said, to put 10 minutes in the morning, 10 minutes at night? What would it look like to kind of change up that lifestyle a bit?
That's really
see
hard.
how that would. Well, it is. Yeah. But again, the journey is not, it's supposed to be hard in a sense, because we're trying to emphasize that there's a better quality of life out there.
Mm-hmm.
Right.
Yes.
Like there's always something better than what social media has to offer.
And more importantly, as a parent, if you do this, it sends a signal to your children.
Mm-hmm.
Because if you're on social media and you're on the phone all the time and your kids see that, and then you're yelling at them to get off the phone, I mean, you're pretty much a hypocrite.
Yeah.
And kids are like recording machines. Everything they see, they record in their mind. And you just can't get away from it. So then you're like, hey, Cecilia, for instance, she's not, you're on the iPad all the time. Well, she can turn around and say, Dad, well, so are you.
Yeah.
And that was like, you lose any credibility there as a parent.
Yeah. Yeah.
I love that.
That's great.
We've been discussing anger and fear. When we break it down and we look at the brain, there's three parts to the brain.
Mm-hmm.
There's the instinctive part, which is all of a sudden fight or flight. It's then the emotional part, which gets in, and that's the one we're talking about as well. It's like your emotions. Then there's the thinking part. You've been talking about and giving solutions on the emotion part. Don't make that decision there. Let it flow. Give it time to flow into the thinking part, which is the frontal lobe, which is the one that makes decisions, the rational part of the brain. Yeah. We get stuck in the emotional part and we hit the button and we sell, when we really should have said to ourselves, is that the right decision? Yeah. Should I be more curious?
So even with that, like you said, 3 parts of the brain. So what we're trying to do is reprogram that emotional part to say, because you're going to act on, not act, but you're going to get emotional regardless, right? Like that's just part of human nature. If someone hits you in the face, you're going to get angry. You know what I mean? Mm-hmm. And so it's learning how to reprogram that part of the brain by, like you said, giving it time, waiting 12 to 24 hours at least before you make a huge financial decision, buying, selling, whatever it is. That's what I like to do. I think I talked about this last time. I waited like a week or two to buy this new gun. I actually did buy it, by the way. I bought a Ruger revolver. It's coming in today, which is nice. I'm looking forward to that. But again, I waited for it, right? You got to wait for it and see, do I really want this?
Yes.
Because if the day after comes and you're like, oh, no, this was just an impulse thing. I was actually just doing this again recently with a little guitar thing that I wanted to buy. Like, I want to get this thing for recording. I'm going to give it a day. And then after a day, I'm like, I really don't need this right now. I have what I have right now. It's good enough for me. I can put this aside for now. So it's learning to recognize those patterns of, do I need to buy this? Do I need to sell this? Recognizing that, taking time, and then making that decision. Because your instincts know a lot more than you think they do.
And more importantly, you can afford it.
Yeah, that's so.
That's the important thing. You're not putting it on a credit card. You're not doing something financially irresponsible. You're paying from your excess. That's important.
That's the other thing too.
I think, Michael, the last thing I would say is, as an adult, I still have a lot of emotions. I still get triggered. I'm trying to work on that. I'm trying to give myself more grace. And if you're listening to this, I think we all need to give ourselves a little bit more grace, because we tend to beat ourselves up. Oh, I overreacted again. Well, those are your patterns. They've been with you for so many years. It's hard to break them if they're unconscious. We're just trying to make them conscious through this conversation we're having right now. We're trying to make people aware of what's going on, so that if they feel afraid and they hear the market go down, well, their unconscious pattern is to hit the button and to get out.
Mm-hmm.
Give yourself some grace. Give yourself some awareness. Make yourself understand that that's a pattern that's been going on for a long time. Recognize it. Maybe go out and get help. Go out and find somebody who can help you recognize those patterns and see how you can shift those patterns to do what you're doing. Because I love it, because you're young. You're already understanding that at such a young age that, wow, I don't have to be ruled by my emotions. My emotions are important. I need to be excited. I need to be energized. But if that's the only way you're making a decision is by using your emotions, you're going to make some really bad decisions.
Yeah.
That's important.
Definitely.
Mike, I'm not going to get angry at you.
Uh-oh. What
I love the conversation. I really do. This is therapeutic for me. This is like going to therapy because I know that I need to work on this a lot. On the investing side, it's been pretty good. But as a parent, I need to learn how to just calm down and not get overtaken by my emotions.
Yeah. So I think with that, that's good, because part of this, the way we overcome these things is by talking, is by just simply, I've got a good friend who's like, I get really angry at these things, and I find the more people I talk to about these things, the easier it comes to deal with, right?
That's a great point. I love that. Now, if you want to learn more how to create happy money, a happy family, and a happy legacy, go to Barbaro360.com. Join our free community. Download our book, Happy Money, Happy Family, Happy Legacy, and we will see you on next week's Happy Money podcast. Thanks, everyone.